once you cosign or co-borrow, you no longer can get a second loan. The bank comes to me, chases me.
Yeah.
I'm financially responsible. A lot of people, you're right, they're like, oh, it's okay, I'll just help. And then now like, okay, it's my turn to get a car. They go to a dealership, they're like, well, you already have a car. No, I just helped my friend. Well, you can't.
Hello, George.
Hello, Kobe.
We are at episode 7 already.
Wow, time flies.
Time flies by. And today's topic is actually something that it belongs to one of the most common conversation we have with our clients. Chances are, if you've ever tried to get approved for anything, you have probably heard of it, cosigner. Whether you are the one who needs a cosigner or the one being asked to cosign. So first of all, what kind of situation would actually lead someone to need a cosigner in the first place? And what does those persons' credit or financial profile looks like?
Depending what you're applying for, but let's go with like, the auto loan or say even mortgage size, the most, financially biggest amount. Mortgage will be your number one and auto loan will be your second. Credit cards, personal loan, let's not touch into that because most of the time you will get approved because it is a smaller amount, right? What leads to it? I would say there's a lot of variables that can lead to it. Mainly, again, credit is number one, okay? Your credit itself really dictates the whole entirety of the profile of yourself, right?
Yep.
The borrowing power. So in credit world, it's called the 5C, and I think I briefly mentioned a long time ago, one of this, the capacity. That's a big part of the entire adjudication from the underwriter. So adjudication, if anybody ever watched John Wick, one of the episodes did say the adjudicator then came down. It's really to investigate the whole entirely. So during the manual adjudication, the adjudicator or the underwriter itself would, or the credit analyst would assess the whole credit profile and financially. So inside they have their own system called the FICO, okay? Internal, they can see a lot of things that a lot of people don't see. For example, especially right nowadays with IA, you could input yourself a title, a company, and you make X amount. They can see something that, okay, if you say you make this amount, let me go and check on your taxes.
Oh, so they're gonna verify.
Oh, yes. Internally, yes. They have a lot of tools and resources. And if they're like, well, last year you only did 10,000.
Yeah.
How did you claim now 80,000 this year? Something's not right.
Yeah.
Bottom line, when the puzzle pieces are not put together properly, correctly, that's when these cosign, co-borrow start kind of coming up.
I see.
Or your financially cannot suffice the TDSR, total debt service ratio, or total debt service, TDS. That also can trigger cosign.
Yep.
Co-app, co-borrow, whatever you want to call it, okay? Or, obviously, number one, the credit. So there's a lot of variables that will lead to cosign, co-borrow. Yeah.
I see. But on the flip side, not anyone can be a cosigner. So what does a lender look for, or what is the requirement to be a cosigner for somebody?
So the whole point with cosign, co-borrow is to strengthen the application, to strengthen the whole borrowing power, right? So normally the rule of thumb is always the spouse or common law boyfriend, girlfriend, okay? Because that allows then you can share the both debts 50-50 and income can combine as well, okay? Really, yes, I mean, it's true, not everyone qualify, because if you go and just, grab someone, whether it's random, whether it's your brother, sister, whatever the case may be, the credit has to make sense to be that cosign co-app. Okay, you can't just maybe someone like 400 score, on mat leave. Yeah, there's really no point.
Yeah.
So not everybody's qualified.
So it's probably you need to bring in someone with like a stronger score or maybe a stronger income, right?
Stronger credit or stronger income, or both.
Credit.
Yeah, stronger credit, stronger income, or obviously the best is both.
I see.
Right? You don't bring someone that's not going to help strengthen the application. Some lenders even say, hey, please remove the COHAM because it's not helping the application.
Yeah.
I've seen it many times. They kick the co-applicant out.
So it's not the more applicant, the better, right?
No.
Okay.
No.
Okay.
There is a small little difference between cosign and co-borrower. In the automotive industry, it's a little bit different. I'm not going to get too details because each lender treats it differently and how they represent the contract differently. But easy as you guys can ask ChatGPT, Google, and all that. Co-borrower is more like the mortgage side that kind of applies, where if you co-borrow, you own exactly both or primary financial payment ownership. That's what co-borrower is. Cosign is just cosign the financial part. They don't own it or they don't need to own it.
Yep.
But again, if you don't pay, I'm now the second person responsible to pay for it. Okay. And co-app is just an applicant before the cosign and co-borrower.
Okay.
So it's just kind of a broader term of it.
Yeah,
Not at all.
that clear things up. So can I ask my colleague or my friends to be my cosigner? Do we have to be like related?
To share the debts and the financial part, as I said earlier, it has to be a spouse, not even a direct family. Okay, so it has to be a spouse, common in law.
It can't be my parents?
No.
Oh.
Yeah. They can co-sign,
Yeah.
they can co-borrow, but to strengthen the whole portfolio, it does not.
I see.
So in auto, okay, now they're gonna ask, okay, who's driving the car? Because now, like, okay, now you brought out your mom's 800 score. At the end, probably they'll now please remove your son or daughter or whatever. Or very tricky because then now the underwriter or the lender's like, okay, so who's driving it? Now, if we remove that person that they know they're gonna drive, which is say you, well, then this application actually doesn't suffice anymore.
Yeah.
Because now the purpose is really meant to be for your kid. But then your kid credit is so weak. Now you put the mom. Now mom is the only one. But then now they're gonna say, okay, all the ownership, all the documents, all the financial, all the void check, everything has to be the mom's name.
I see.
Right? So then it kind of sucks because then now, well, what's the purpose of then cosign? Right? Because now if it's just a mom, there is no more cosign.
Yeah, you can apply on her own probably.
It would have to be basically. It's not a very straightforward application when it comes to cosign. It has to make sense.
Let's talk about the other side of this, because a lot of people agree to cosign before they fully understanding what they're getting themselves into. Like, what are the actual risks for the people who agree to cosign?
It varies. It's really situational. It really depends also what you're applying for. Right? Auto loan and mortgage is very, very different.
Yeah, of course.
I would say to every viewers, to answer your question, once you cosign or co-borrow, you no longer can get a second loan.
Oh yeah.
Because you are equivalent to the responsibility for the financial part equally. So if I help you cosign, you don't pay, you run off, the bank comes to me, chases me.
Yeah.
I'm financially responsible. When the Equifax pulls up, it will say J as in joint. Both equally is impact. So the advantage is, if you pay on time, it helps my credit building too, in some ways. But if you don't, it affects me the same way too.
I see.
Right? So a lot of people, you're right, they're like, oh, it's okay, I'll just help. And then now like, okay, it's my turn to get a car. They go to a dealership, they're like, well, you already have a car. No, I just helped my friend. Well, you can't, because now how can, in theory, you afford two vehicles? Unless you're like 800 something scores, like really high sevens. You're making like, you know, $15,000 to $20,000 a month, and all your debts combined is only really less than, you know, 30%, maybe even like 10, 15%. So you can again service that debt. Then lender's like, okay, you can afford a second unit.
I see.
But 9 or 10, no.
I see. So it's like a big commitment, right? Financially.
Financially, yes. Financially, it's a big risk for any cosigner.
So once someone has co-signed, is there a way to eventually remove themselves from the agreement? Like,
Yes, you can.
can they remove themselves, or do they have to be like a mutual agreement that?
No, they cannot just go and remove themselves at their own will. The only way is, I'll give you an example. You are the main applicant. I'm the cosign. And then due to maybe down the road, financial, I want to buy a house, I want to buy a car. I said, Kobe, hey, you got to go to a dealership, do whatever you got to do, remove me. The process to remove the person is now, if your credit is better and stronger, let's help you get approved, only you.
Okay.
So then it'll be like an upgrade or refi or a new different product, but only you. So now that agreement is brand new. It's just you. I'm now removed from the old financial agreement.
I see.
That's the only way.
So,
You can't just go to a bank, hey, remove me.
I see.
Because that approval was based on
Yeah.
both.
So we need to go through the whole application.
a new brand
process.
new application. Yeah. In the mortgage world, there's also called a first-time home buyer.
Yeah.
At any given time, that person is named on any application of the mortgage is not considered first-time home buyer, even though you're not helping buying it.
Just now you mentioned it has to be spouses or like common law partners in order to co-sign for somebody. What if like in like a very worst scenario, they broke up or they file a divorce? So what will happen then?
Well, then that's something that the lawyers will handle. That's
Okay.
more of the legal, right? So then they'll have to discuss, okay, then who owns the car, who doesn't, who's keeping it, who's not. Those are logistic stuff that's up to the lawyer, and see how both parties, like you said, agree or disagree, and goes from there.
I see.
Yeah.
So there will be a lot of hassle to go through, right?
A lot.
I see.
So to viewers, very cautious when co-signing. I have many clients come in and say, oh, you know, this deal's no good, I can help her co-sign, I'll get better. I'm like, you sure you're not gonna buy any car within a year, right? And right away they're like, what do you mean? Well, now you can't, because you partially own it too, right? Whether you, again, in automotive, not so like co-borrow or co-sign, but just the bottom line, financially, you're fully responsible. Because now lender's gonna ask, okay, well, George, you help Kobe co-sign financially. Now they always think worst case scenario. They're very conservative. Banks are very conservative when lending money.
Yeah.
What if Kobe don't pay? Now you have to pay 2 loans? Okay, no problem. Let's see if you can afford it, right? So credit-wise, meaning the trust I can give you double the amount, and then on top, financially, you have to prove you can truly afford more than 2 vehicles.
I see. So it's more than helping someone out. It's about like sharing responsibility.
Oh yes, oh yes, oh yes.
So for someone watching this who is either thinking about asking someone to co-sign for them or being asked to co-sign for somebody, what is that one thing that you want them to like walk away knowing from this today's episode?
Look, again, it's a tough call, because again, not a lot of people out there are qualified and certified, so they don't really need to explain like how I'm explaining everything so detailed. They're just like, okay, hey Kobe, in a nice way, basically you're declined, but in a nice way, please go get a cosign. They cosign and okay, we're good. They won't explain, they won't tell you the risk until one, again, they're not qualified or certified. Two, they're scared they might say the wrong thing.
Yeah.
Right? So to all viewers and consumer, be very mindful. So it is true nowadays to find someone or some people honest and have integrity is hard.
Yeah.
It's hard. It's hard. But in Canada, mortgage is they're really pushing that. Every year you renew your license, you have to do a full test. Again, talking about integrity, talking about honesty and stuff like that. Right? So again, to all viewers, if you have watched the previous couple episodes, always do a lot of research.
Yeah.
A lot of research, you know, in terms of when things happen like this. Did someone ever told me, oh my, I didn't know? A lot of clients really, I didn't know. I just thought I would just help cosign and that's it.
Yeah. Yeah.
And then now they're screwed.
Yeah.
Right? So be very, very mindful. Be very, very mindful.